Hello, my name's Hilton Supra from Ztudium Limited and our Open Business Council Summit that we are going to be running on the 9th and 10th of December. Today we are doing a quick introduction to one of the panels sessions that we'll have at the summit. It's going to be the future of capital markets, ESG, Fourth Industrial Revolution, and particularly the framework of Society 5.0. I'm very pleased today to have with me Hirander Misra, Chairman of GMEX Group and SECDEX, and Xavier Gomez, the founder of INVYO. They will be the core panelists for this event, and we very much look forward to having them participate at the Open Business Council Summit, which is going to be focusing on digital transformation for businesses, governments, the Fourth Industrial Revolution, Society 5.0, in particular, where artificial intelligence, blockchain, Fintech will enable us to build a better future after COVID-19. Past, you're chairman of GMEX and SECDEX, and have a particular interest in ESG, Fourth Industrial Revolution, and Society 5.0.
I mean, these are very, very interesting topics because obviously for IR now, there's a multitude of technologies, blockchain, artificial intelligence, Internet of Things, now advancements in quantum computing. You could argue that the technological revolution in terms of the number of new technologies and their possibilities is greater than ever before. But obviously, that leads to massive unicorns being created, and certainly entrepreneurship and opportunity is great. We're all doing that. But what's the wider purpose of this? Because beyond, let's say, corporations creating value, there's also an opportunity to create social impact. And this is where Society 5.0 comes in, because the natural extension of the Fourth Industrial Revolution for IR is then about these technologies empowering and democratizing individuals beyond those corporations as well, so that there's collective benefit.
Xavier, thank you very much for joining us today. Tell us a little bit about INVYO.
I'm a background of bankers during many years in top tier one banks, Credit Suisse. I spent all my career between investment banking and wealth management, and I decided to co-found my company INVYO, a business intelligence platform powered by machine learning and NLP, dedicated to financial services in order to help financial institutions in their digital transformation. And I like this period because it's a transition period for the world and for our financial industry. As you know, blockchain, IoT, and AI are key technologies driving the next wave of digital transformation. And all this technology will converge and will allow for a new business model, high frequency trading, for example, in order to increase profit, better compliance with AI in compliance, automation check, and of course blockchain technology in order to securitize whole business in each step of the trade, for example, front to back process. And blockchain, for example, can increase the trust and transparency, security and privacy of business process by providing a shared and decentralized distributed ledger, and ensure the security of finance transaction.
In essence, what you're saying, Xavier, is that really there's that convergence of blockchain, AI, smart contracts, in use of data analytics between the legacy financial markets and the technologies of today that would make business a lot more efficient going forward. In terms of your experience, Hirander, and working with SECDEX in particular and GMEX, you've been on the forefront of developing quite a lot of these type of solutions. Can you just, very briefly, just run through the framework that you are currently working in helping to bring this convergence about?
The issue we have now, and it's a nice problem to have, is there's the old traditional technologies, be it centralized exchanges, trading, clearing, settlement, and the way that trading's conducted on those. But equally now, you've got the decentralized DeFi construct with effectively, proof of stake and the ability to create some innovations there. And whilst there have been some security concerns around that, a lot of those are kind of process driven and the way things are managed rather than an inherent issue with the technology. But you've got the old world, the new world, and obviously some of the digital exchanges that are centralized with some decentralized constructs as well. But there's more fragmentation than ever before, because if you have thousands of banks on Swift, but then you've got a few hundred banks on Ripple, the old world and the new world have to talk to each other effectively, right? Again, there's lots of talk of open banking, but it's very much in its infancy, and you're dealing with a lot of legacy platforms. On the other hand, exchanges are very siloed in the sense that markets went electronic in the 1990s, but they're pretty much silos that don't talk to each other. Whereas blockchain allows you to do that, and also cross-border, excluding sanctionless countries and things like that, the ability to affect smart contracts, across borders, because effectively there are no borders, but of course we need to conform with KYC, AML, and there's no such thing as kind of global licenses. But certainly being able to affect those is key. But for those to function effectively, smart contracts need effective data analytics and a good underlying AI constructs built on that to drive them as we go forward. And this is going to fundamentally change the way that exchanges and market infrastructure works, because we've done a lot of the work to bridge the old world and the new. But now beyond that, with a smart contract ecosystem above it, it really creates a global ecosystem to make it more effective, more cost effective to trade, clear, and settle.
Absolutely. I mean, one of the things, I think the irony of the situation is that with the new technologies today, things become much more transparent and actually much easier to track and trace the source of funds, et cetera, when you're doing your AML. And your know your client, et cetera, or know your business. So essentially, these things should be embraced more rapidly. But in fact, the legacy systems of the past and the fear, for some reason, there's the fear of fear or whatever, the fear of change, is holding back quite a lot of the evolution and development. In particular, we talk a little bit about ESG, where ESG has been utilized effectively in asset management and private banking, but it is using technology in order to actually help that. Xavier, you must have come across some of the experiences you had when you are working in the past and currently in terms of ESG and how technology is helping that.
In the first step, ESG has been seen as a negative point of view from finance sector at the beginning, because who was that, how manage that, and it was a little bit difficult to find the right element and concept to integrate in investment policy at the beginning, in particular in asset and wealth management. And we put in place some process and work with consulting firms. And clearly, now it's just the beginning, because you have a lot of buzzword about that. And the big leveraging, it's in terms of marketing on the first step. And the first step was to answer to the request of investors who believe to ESG factor as a key performance differentiators. And the investors who believe in ESG investing has been widely capitalized as an effective marketing slogan, and the popularity of ESG investment product remain largely driven by the fact that investors wish to see their investment performing well while matching their environmental and social values. And the funny thing, this is the support of technology, in particular AI, in order to find the ESG factor and to respect this ESG factor on their investment, in order to avoid idiosyncratic risk as you can have with a current portfolio manager, and to respect exactly what the final client looking for in terms of ESG respect investment, and respect also the risk and the performance. And the mix of ESG criteria and the support of technology, in particular AI, it's clearly a game changer. And you can have a very good example, a use case with a big company, invest a lot on that. In particular, in France, a big asset manager, Amundi, a global asset manager such as BlackRock. BlackRock is just amazing in terms of investment on this ESG, in order to respect the investment and looking for a good opportunity with the respect of all criteria. It's a big game changer, in particular for millennials investor, because this generation want very strong respect these criteria, clearly.
Thank you for that. I mean, the most important thing for the panel discussion that we're going to have on December 9th and 10th is to really, I think, explore that as we move towards using ESG and enabling ESG investments to be managed efficiently using technology, there must come a convergence and then a divergence moment, a convergence in terms of return, that the return is as good as if you didn't invest in an ESG basis, to a point where you actually use technology in such a way that you actually generate an alpha over and above the normal investment strategy and normal investment process, whether it be on a sector, industry, or country or global level. So this is going to be something that I think we'll talk about in the panel going forward. Do you have any comments on that briefly, Hirander?
Yeah, I mean, just touching upon what you mentioned previously as well about KYC, ML, I mean, and then some level of transparency. You know, we're now digital custodying different forms of crypto and digital assets, and also creating issuance of those on SECDEX and the Seychelles. And it's very, very interesting because on the one hand, we've got Bitcoin, and I was speaking to one of our clients the other day, and they said, look, you know, and we went down the road of getting regulated because, you know, for us, it's very, very important that there's that level of transparency. And we speak to one of our clients, and he said, you know, Hirander, there's almost going to be two prices that emerge for these types of assets: those that are outside the system and the source of funds to purchase them, or the source of funds when we call it source of funds in terms of the way that the BTC originated, you know, one that's verified and it's in the system. And as you said, Hilton, it's much easier to track and trace that, you know, compared to money, actually, because, you know, again, if you do it properly, all these are on-chain transfers. But on the other hand, you're going to have those illicit BTC digital assets outside of the system, which trade at a different price, you know, an inferior price. So, you know, two-tier systems already beginning to emerge. On ESG, it's very, very interesting because we have a green fund out there that will be activating, and there's an ESG component as well, because we see a big opportunity for SME financing and also micro SMEs, but not in terms of listing but you create a fund and then you create a digital bond that users can subscribe to. But you provide them with clear criteria in terms of the basis of what they're investing into. Similar to the BlackRock argument that Xavier uses, because those investors have got clear mandates and they want specific structures. But now all of a sudden, using the blockchain, you can transparently see what capital's coming in, how it's being invested into the fund, and where it's outward invested as well into those individual projects, whether they are tokenizing them or they're in-country projects. It doesn't really matter. And that's important because, all right, on the one hand, you're delivering return, but on the other hand, you're delivering transparency, because, there's a lot of projects that are tagged as ESG or investments that are tagged as ESG, but they might not necessarily be ESG as well. And it's important to get that transparency. We rely on credit ratings, whether we like them or not, in certain sectors. But I think standards will increasingly emerge here. But to make those emerge, sometimes market forces have to drive it.
So in terms of our panel that is going to be put together, that you're going to be moderating, Hirander, with great participation from Xavier, where you'll be looking at the future of capital markets, ESG, Fourth Industrial Revolution, Society 5.0. There's going to be this overlap between the old and the younger startups, players and collaborators, et cetera, et cetera. But at the end of the day, our experience knows is that large players look at this as a threat. They purchase and collaborate and then stifle, which I think we'll discuss a little bit at the panel. Or if they really bring on board the new kids on the block, so to speak, no doubt, if they really embrace the technology and embrace this innovation, then the future's bright. And that gives us an opportunity to discuss this on the panel on December the 9th and 10th with the Open Business Council Summit. Thank you very much indeed for today, this podcast. And we look forward. Xavier, thank you very much for joining us. And thank you, Hirander. And we look forward to seeing you.
Pleasure.
Goodbye.
Thank you.
My pleasure.
Goodbye.